Hold on to your hats, folks, because the Oracle of Omaha just made a big move. Warren Buffett, the legendary investor, has decided to sell a hefty chunk of his Apple shares. We're talking about 50% of Berkshire Hathaway's stake in the tech giant, a move that has sent ripples through the financial world. It's not every day that Buffett makes such a drastic move, especially with a company he's been so bullish on in the past. Now, before you panic and start selling off your own Apple stock, let's take a deep breath and understand what's going on. Buffett is known for his long-term investment strategy, often holding on to companies for decades. So this sale has left many scratching their heads, wondering if the Sage of Omaha knows something we don't. It's important to remember that even the most successful investors make adjustments to their portfolios. This doesn't necessarily mean that Buffett has lost faith in Apple. However, it does signal a shift in strategy, and it's got everyone talking. With this massive sale of Apple stock, Berkshire Hathaway's cash reserves have swelled considerably. We're talking about billions of dollars added to their already impressive war chest. Now, Buffett is a firm believer in keeping a healthy amount of cash on hand, and for good reason. Cash provides flexibility. It allows Berkshire Hathaway to pounce on new investment opportunities as they arise. Whether it's a struggling company ripe for a turnaround or a promising new venture, having cash ready means not missing out. This move has sparked speculation about what Buffett might be eyeing next. Is there a hidden gem he's been waiting to acquire, or is he simply bolstering his defenses in an uncertain economic climate? Let's put this sale into perspective. We're talking about Apple, a company that has been a cornerstone of Berkshire Hathaway's portfolio for years. Buffett has often praised Apple, calling it a family jewel and comparing it to a consumer goods company rather than just a tech giant. The value of the shares sold is staggering, even for someone of Buffett's stature. It highlights the sheer size and scope of Apple's presence in the stock market. Despite this sale, it's crucial to note that Berkshire Hathaway still holds a significant amount of Apple stock. This wasn't a complete divestment, but it was a substantial reduction that has certainly raised eyebrows. Section 4, a look back Buffett's Apple journey. Buffett's history with Apple is a fascinating one. He wasn't always a believer in the tech giant. In fact, for years, he shied away from investing in technology companies, famously stating that he didn't understand them. However, in 2016, Buffett's perspective shifted. He began acquiring Apple stock, ultimately amassing a massive stake in the company. This change of heart was largely influenced by one of his trusted portfolio managers, Todd Combs, who saw the potential in Apple's brand loyalty and strong earnings. This decision to invest in Apple proved to be a shrewd one, as the company's stock soared in the years that followed. Section 5, what's next? Reading the tea leaves. So what does this sale mean for the market and investors? That's the million-dollar question, isn't it? Some analysts believe it's a sign that Buffett is bearish on the tech sector as a whole. Others speculate that he's simply rebalancing his portfolio, locking in profits after Apple's impressive run. It's also worth noting that Buffett has been selling off shares of other companies recently, including Bank of America. This suggests that the Apple sale might be part of a broader strategy rather than a specific concern about the tech giant. Ultimately, only time will tell what Buffett's next move will be. But one thing's for sure, the Oracle of Omaha keeps us all on our toes.